Welcome to the explainer. On the surface, an earnings report, it's just a bunch of numbers, right? But if you dig a little deeper, there's always a story. A story about strategy, big bets, and ambition. And today, that's exactly what we're going to do for one of the travel industry's biggest tech players, RateGain. So let's get right into it with the latest earnings from RateGain. The chairman's opening line sets the stage perfectly. He talks about momentum, execution, and investments. Okay, but what do those buzzwords really mean for the business? Let's decode this thing. All right, so here's how we're going to break it down. We'll kick things off with the headline numbers. Then we'll get into the really exciting part, a record quarter for new business. After that, we'll peek under the hood at their different business segments, explore their huge bet on AI, and finally, get the view from the top, what management is saying about the road ahead. Okay, let's dive right in. First step, that Q1 financial snapshot. So looking at the numbers, you see a story of steady, solid growth. Operating revenue, up 5%. Profit, up about 3.4%. But here's the number that really jumps out, the one management keeps highlighting, an 18.2% operating margin. And what's really impressive about that is they hit this number after dealing with things like annual pay raises and new investments. That tells you they're running a pretty tight ship. Okay, but here's the thing. Those numbers, they're backward-looking. The real story, the part that got people talking this quarter, is all about the future. And that's new business growth. And let me tell you, it was a blockbuster. Get a load of this. RateGain locked in 81.7 crores, that's 817 million rupees, in new contracts. This isn't just a big number, it's a 6-quarter high. We're talking a nearly 38% jump from last year. Now that is a massive signal for where future revenue is headed. So you might be asking, where's all this new business coming from? Well, here's what's so interesting. If you actually pull out the numbers from their recent acquisition, Adara, and just look at the core RateGain business, it's absolutely on fire. It posted its own highest ever new wins, growing an incredible 53% year over year. This shows the original engine isn't just healthy, it's accelerating hard. And that incredible growth makes what we're about to see next even more fascinating. Because to really get what's going on, you have to look under the hood at the different business segments. And that's where a really smart strategic story starts to unfold. Okay, so at first glance, this chart looks, well, a little weird. You see MarTech, that's marketing tech. It's their biggest piece of the pie, and it grew a super healthy 16.5%. Great. But then you look at DaaS, data as a service, and distribution, and they both actually shrank compared to last year. And that brings up a really obvious question, right? You're probably thinking the same thing I was. How can new business be at a record high if 2 of your 3 main business lines are shrinking? Doesn't that seem contradictory? Is it a sign of trouble? Well, here is the brilliant part. That decline in DaaS, it wasn't a mistake. It wasn't a failure. It was a plan. RateGain is deliberately moving customers from its lower-value DaaS product over to its much more powerful MarTech platform. It's a classic strategy. Move customers up the value chain so you own the whole relationship. It's a much, much stronger place to be for the long run. Okay, so what about that other shrinking segment, distribution? Well, that's a classic turnaround story. Management basically said, and I'm paraphrasing here, the pain from old contract issues is over. It's behind us. And the proof is in the pudding, right? The new deals they won in this one quarter were more than 65% of all the new business they got in that segment for the entire last year. That pipeline is screaming rebound. Now, all of these smart moves are happening while RateGain is doubling down on its biggest bet for the future. And that bet is all about AI. Yeah, RateGain is going all in on being an AI-first company. The vision here isn't just about selling one-off products anymore. They want to build a single integrated AI platform that helps hotels and travel companies do everything from finding new guests to keeping them happy. And this isn't just some fuzzy, far-off vision. Let's make it real. Take their product called Viva. It's an AI voice bot that can handle a full hotel reservation 24/7 in 18 different languages. Think about it. A guest calls, the AI gets it, checks prices, books the room, handles payment, and boom, it's in the hotel system. It turns every single phone call into a potential sale without a human needing to lift a finger. And look, it's not just marketing hype. Their customers are already seeing the benefits. This quote from an analyst at a huge hotel brand is perfect. They call a new feature a game changer because they spend way less time messing with spreadsheets. That's the kind of practical, real-world value that makes the technology stick. So, you've got this big strategic shift, this huge bet on AI. What's the official word from management? Let's break down their guidance, their tone, and the risks they're keeping an eye on. You know, when the chairman was asked about their targets, he was super clear. The official tone is what I'd call confident but careful. They're sticking to their original annual guidance, but then he adds that their aspiration is to blow past it. It's that classic move, right? Under-promise publicly so you can hopefully over-deliver. And here's that official guidance they're sticking to. Revenue growth of 6 to 8% and an EBITDA margin between 15 and 17%. And just as a quick reminder, EBITDA is basically a key measure of a company's operating profitability. So these are the public benchmarks they've set for themselves. But of course, no plan is risk-free. What do they need to watch out for? Well, number one is execution. They've got this massive book of new orders. Can they turn it into actual revenue quickly? There's also a tiny bit of pressure on margins as their business mix changes. They have to manage some small customer churn, the long-tail clients. And of course, they're always at the mercy of the big picture, global travel trends and how people are feeling about spending money. But the CEO wraps it all up with this really optimistic long-term view. He's essentially saying, look, all this money we're spending on sales, marketing, and AI right now, don't think of it as a cost. Think of it as us laying the foundation for what's coming next. And that really leaves us with this one big question, doesn't it? RateGain has clearly turned a corner. They fixed old problems and built this huge pipeline for growth. They have a bold, clear strategy centered on AI. All the groundwork is there. So the question is all about execution. Can they take all this momentum and turn it into true, long-lasting dominance in their industry? That's the story we'll all be watching.